is up? What is good? We'll be going over trades taken today. So today we'll start off with going over what this week was gonna look like news wise. All right. So today we didn't really have much. We had just some little news happening at 5:30. There was also what wasn't on here was a news was a FOMC member speaking actually at 11. So I was looking at price during 11 and it just dropped immediately. So, but we're gonna go over trades today because it was a free trading day. Like we could trade whatever we want to. All right. So starting off going in the morning, we already, like I said yesterday, I wanted to see this low. This low be taken out in order to reach for higher prices. So when we took out the low, I started looking for a shift, and this was a really good trade because there was SMT here with ES. So ES took this low. So that gives us the idea that smart money is entering positions. So after that, we started looking for longs, and some people that I know they did really good on the longs right here. Oh no, these longs were also good because we swept this low by a tick, and then we came here, and the first fair value gap we see, probably better on like a 4 or 5 minute. We inversed and we just shot up and we took out all of these highs right here, all of that liquidity. We're going into the 9:30 open, so we opened, some volatility going to the upside. There was a trade here. We inversed this fair value gap. So we took out this liquidity and we shot down. I wasn't looking for any trades here. And the macro started, and this was the first trade I took for the day. Was actually on the 5 minute, but why this trade was a little bit weird is because my mentor was saying it wasn't a good trade. He's saying a B minus trade, but then he said it was a B, just a flat B trade. So it kind of instilled the idea in me that it was not a good trade. Even though looking back over it, it was a really good trade. Let me tell you why. Why I think it was a really good trade and why I took it at the time, but I didn't take it with correct sizing due to the fact that I really thought that it was a okay trade because my mentor convinced me, which maybe it was. Maybe it truly was a okay trade, but yeah, I thought it was a good trade. So right here, we sweep the relative equal lows, sweep it, never closing under, so we never get a market structure shift. I mean, we close under this low, so technically we do, but we don't close it under this low, so we're not seeing any energy underneath these lows, which is what we would want to see if we're gonna chase for lower prices, because we already swept out this high, so we would want to drop now. And then the macro started. So we see at 9:50 the macro starts, and so we're gonna see some price action. We'll get some model during this time. And we also have the 10 a.m. reversal that starts right here. So why didn't we factor this in? Why didn't I factor this in? Next time I'll be more aware, but what I did factor in is there is this fair value gap right here. And so once price closed above with energy, we were only able to target here. So I was like, okay, I'll wait for a better pricing in order to enter. And then this is what the highest probability inverses give us is that order block forming right here. So Dodgy was seeing it. He said it's probably not going to work because he entered, but then he moved to stop to break even, then he got stopped out, I'm pretty sure. But what I also saw is this fair value gap right here being filled with this. So he was not seeing the order block potentially being formed, but I was seeing we're filling this fair value gap, and we're probably going to shoot up in the last 1 to 2 minutes of the 5 minute candle because that's when the distribution phase happens. And then yeah, so I only entered with micros, which is like what, like $1 a tick? I don't know. $5? No, it's not $5 a tick. Like $1 a tick compared to here, which is like $5 to $15 a tick. So after that, yeah, price shot up, and you would have been feeding your family pretty nicely if you took that trade. The next trade I took of the day, I mean, there was this trade. This was a pretty good trade in my eyes. So we had this fair value up here that was obviously rejecting price. But price did not close above in time. I mean, it did close above in time because we still did not take out this high. Close, drop, drop, drop. You could have entered technically, but probably would be a little risky. But this is just showing you the power of the inverses. They really hold some power in the way that price moves. And then when we were up here, we were kind of Dodger was kind of annoyed because he didn't get into this, so he was like, okay, we're waiting for Price to pull back, and this makes sense. You could have been stuck trying to chase Price at this point because you're seeing this and you're saying, oh, maybe an order block's gonna be performed. Oh, it's coming down. This repricing to give me a better entry, but you're gonna lose more times than you're gonna win, especially if you're over trading and you're doing this. So that's why I was just okay. If I'm gonna enter again in a full position, like a according position, I'm going to wait for a pullback. So we got this pullback. It was not the one that I was wanting. I would have rather had a pullback down back to equilibrium of this range. So we would have seen like into here, maybe tap this, like with resistance. I wouldn't want to see that be slow. I'd rather see that within 2, 3 candles. We tap, 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 boom. You know, maybe even 5, 6. But so, nevertheless, this was a really good inverse because let me show you why. So, price creates one big fair value gap, one big opposing fair value gap. And look, we see that right here. We're tapping in, we're delivering from this fair value gap in this order block right here. And we see price closes back above. It recovers really quickly, closing above closing above the wick of this order block right here, the low of this wick, showing a change in state of delivery, which means that's our entry. So your perfect entry would have been here. I entered a little bit late. It might have been even right around here. I didn't enter too large just because this trade was, I mean, it was just a huge stop loss. I wasn't really trying to have a 43-point stop loss right here. So if I entered better, like sooner, would have been here. And I would have exited if we were stalling, because this isn't one of the trades that you want to stall if it closes like this and the next candle is all the way up here. So yeah, this trade was a 3.1 resort. Yeah, I didn't hold it any further than this. This one I missed. This is right before that 11 o'clock news that I was talking about earlier. So once that 11 o'clock news hits, you can see we just dump. And there was a perfect inverse to be caught, and Dodgy caught it. Now this one was pretty interesting. So we're on the 5 minutos chart, and what that little guy doing there? And so price closes above this one, and does not work. Although it does create like almost a change of state of delivery. Once I saw this happen, if I was entering, I probably would have been out. That's just not something we want to see. Along with the fact that if you go to the 3 minute, the 1 minute, let's see what price was doing there. This is not the reaction you want to see. You don't want to see price close back under and then react, but then not even get over the previous high right here. Just sweep it. So yeah, you'd have to be out by then. This was not a high probability trade, especially for the fact that it was right after 11, so we're no longer in kill zone hours. The next trade that I took that was not on a live account because I was not trying to risk live money was these ones were good. These are all inverses that happened today that would have been high probability, that were high probability. But yeah, it was this inverse right here. So if you hop on the 15-minute chart, price was obviously kind of bearish. We swept this low, swept back into this fair value gap. Price used a lot today. So I'm going to mark that up for tomorrow because this is a high probability fair value that the price was using. And price inverse this fair value gap right here. And this is only on a demo account because I was not risking live money. But yeah, once price closed above, I entered in right here with like 4 contracts and stopped out at this right here. This little boy right there. So yeah, those are all the trades for today. Going into tomorrow, just 1 second, I'm gonna get all this bullshit off my chart. Shit's not leaving. Say yes. Nope. Order not found. Oh wait. We go here. All right, cool. So yeah, for the day, yeah, we got back up around $400 for the day, which is good. Something I wanted to see. But yeah, going into tomorrow, we still have these CPI highs that I thought we were going to take out today, and now we have even more engineered liquidity, sort of at the top. All these highs that price is resisting from. It's. We need to take out one side, so we're still in this kind of choppier position. But we did close underneath this fair value up react from this order block. We closed above this today, and we still have this daily fair value gap right here. Yeah, we're really going to want to see one of these highs be taken out. This is a crazy high. Um, Going into tomorrow, let's see, what do I think is going to happen? Dude, honestly, I just think we need to take out these highs and dump. We're not dump necessarily, but we're going to take out these highs right here. Tap into this and start moving down. And if not, I mean, probably see us just ranging, taking out maybe like this high. Maybe this. I mean, no, I really see us taking out this high. All right. Thank you for watching, guys.